Hello everybody and welcome to the next episode of our crypto trading crash course. On the last episode you learned how to identify trends, and on today's episode we want to look into what indicator is best to use in which trend. For this, I've loaded up here my chart again. We're going to stick for now with the Bitcoin US dollar chart, and I've identified some trends on this chart. We're going to focus here now on uptrends and downtrends. And the good thing is here, uptrends and downtrends are pretty much the same because you can use almost the same indicators. In trends, we also want to work with so-called trend following indicators, which give us an indication when a trend is going to continue. One of these indicators, for example, is the so-called moving averages. I'm using here a simple moving average, but you can also use other calculation methods for those averages like exponential or weighted moving average, for example. As you can see, after I've identified a downtrend here, the moving average is pretty good in showing me when the trend is going to continue. So look here, whenever the price crosses under the moving average, it seems to be a pretty good indication that the trend is going to continue down, contrary to when it's crossing up. Of course, you always want to combine more than one indicator because there is no holy grail indicator out there that is going to show you always the whole picture. Other indicators that you might want to use in trend markets, such as up or down trends, are, for example, the super trend indicator, a so-called parabolic SAR, or the popular MACD, which stands for Moving Average Convergence Divergence. For the beginning, it's always good to find somewhat a middle ground, so you don't want to use too many indicators that are going to complicate the analysis for you, but you also don't want to rely on just one indicator. So try out here a little bit to find a balance on what suits your eye the best and what makes your life the easiest to identify in what circumstances within the trend the market currently is. If we look at sideways trending markets, we want to use a different set of indicators than in trending markets because so-called trending indicators, trend following indicators usually lag the market very much and will give you false entry and exit signals in sideways market. In sideways markets, where the market is bound between an upper and lower level moving sideways, we want to rely on so-called momentum-based indicators. One of the most popular momentum-based indicators is the so-called Relative Strength Index, or short RSI, which shows you within a sideways trend when the market is either overbought, like here, or the market is oversold, like here, 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 and here. In addition to this RSI, which by its own can work already very well if you've really clearly identified a sideways trend, you could, for example, use so-called Bollinger Bands, which create a moving dynamic channel which can show you when the price has reached a threshold that is also so-called overbought, which would be when the price reaches the red line here on the top, or oversold if the price reaches the lower line. Now you can see, for example, already if you combine these two indicators here in a sideways market, RSI and Bollinger Bands, you can already get some pretty good signals. However, also here it always depends on what time frame are you working on. So the higher the time frame, in my example, for example, daily here, the better signals you will get. If you like to scalp the markets, you are working with 1 minute charts or 5 minute charts, you will get a lot more so-called fake entries and might want to add other indicators or analysis methods to either support your entry or show you that it might be a false entry. In general, there are thousands and thousands of indicators available for free use on the market today. It takes some time and some dedication to find the indicators for you that best suit your eyes. As a general rule, first identify the trend. If you see the market is in a uptrend or downtrend, you might want to stick with so-called trend following indicators. If you identify that the market is in a sideways trend, you might want to stick with so-called momentum indicators. This rule of thumb is going to help you already to pick indicators that really help you and not hinder you with trading. That's it for today. I'm going to see you on the next episode.